Hello, my name's Tom Elliott and welcome to another financial market update for Hodges Real Estate. Well, a lot has changed in the Australian economy since last you and us spoke. Now, one of the biggest things is that the price of iron ore has fallen quite dramatically. Now, it used to be that we never paid much attention to the price of iron ore here in Australia, but we do now. And this is because it, along with coal, is one of our biggest mineral exports, primarily to China, although we do send iron ore to places like South Korea and, of course, Japan. Now, if the price of iron ore stays down where it is, it's got very severe implications, not just for the share prices of the big iron ore companies, of course BHP, Rio, Fortescue and Atlas are all businesses that come to mind, but also for our terms of trade, that is our ability to earn money overseas and the prices we receive for the goods. Well, what else is happening? I'm afraid the news is mixed at best at the moment. If we look at the United States, of course, all attention is on the upcoming presidential race between Mitt Romney and Barack Obama. Unfortunately for Obama, the incumbent president, US unemployment is very stubborn above the 8% mark. Even when unemployment has gone down, it's not so much because new jobs are being created, but more because more and more people are giving up the search for work. That's what we call a decline in the participation rate. We are on the verge of the US Federal Reserve announcing whether or not it will embark on a thing called QE3. No, it's not a ship, it's not the new Queen Elizabeth, it's quantitative easing number 3. In Europe, things appear to have calmed down for the time being. A few months ago, of course, we saw that Greece really was the centre of attention. Many analysts, and myself included, think that ultimately Greece will still fall out of the euro, that its economy simply cannot become competitive again. What about here in Australia? I've mentioned iron ore prices and so forth. That's going to make life potentially a bit difficult if mineral resources and our exports stay down at the current somewhat depressed levels. The Reserve Bank here, I think, has still got its policy settings wrong. Interest rates in Australia are still far too high. The good news is that we can cut rates if we have to. Now, the official interest rate is, of course, stuck at 3.5%. In about 2 weeks' time, just over 2 weeks in fact, the central bank will of course meet for its early October meeting, and I have a feeling this time they might cut rates again. My tip is that official rates will be cut 50 basis points before year end, and I'd like to think that the big banks will pass on some, although probably not all of that cut. So expect variable interest rates to go down between 25 and 40 basis points between now and Christmas. So what does all this mean for the property market here in Australia, and particularly here in Melbourne? Well, I feel like a broken record when I say that the property market is steady at best. Clearance rates seem stuck around the 55 to some weeks 60% mark. Again, that's a market that's perhaps slightly below the healthy level. Of course, the newspapers are full of stories about the odd house that exceeds reserves, but what they tend not to tell you is the large number of houses that get passed in, and we tend not to hear what prices those houses subsequently sell for. It goes without saying that if I'm correct and there's a cut in official interest rates of around about 0.5% between now and Christmas, that should act as a stimulus for the local property market. Against that though, and I've been speaking to some agents who say that this spring selling season will be big, and by big they mean there will be a lot of property offered for sale. So on one hand, if you're a buyer, it's pretty much good news. You're going to have probably cheaper interest rates and probably plenty of houses to choose from. However, if you're a seller, well, you have to get in the queue because lots of other people look like they could be trying to sell too. I'm Tom Elliott again. Thanks for watching. This has been another one of my financial market updates for Hodges Real Estate, and I look forward to your company again, same time next month.